Protecting a family's financial welfare with life insurance is one of the most important decisions your clients will make. I'm Steve Madison, Vice President of Life Marketing, and today we are going to continue the training series, In the Know. In this video, we are going to show you how to help your clients make a winning insurance play. No matter what your client's situation, no life insurance, not enough coverage, the wrong kind of life insurance, or inferior term, you can help them get the coverage they need. During this training, I will demonstrate our life insurance philosophy and 4 winning plays. I'll be using Be a Life Champion and Make a Winning Play. It is a print piece and available in the company store and in the download center on POL. It is available in US, New York, and Canadian versions. The first page is Primerica's philosophy, which was right in 1977 and is still right today for Main Street families. This simple educational approach to explaining the need for life insurance changed millions of Primerica families. We believe this is the best way to use insurance. Here is how to present this page. Mr. and Mrs. Client, Primerica believes in the theory of decreasing responsibility, which states that in the early years of a family, they have a lot of responsibilities, such as young children, high debt, and a home mortgage. Now, at the same time, that family typically does not have a lot of savings, as represented by the yellow line, which means that a loss of income for that family would be devastating. The green line represents the need for life insurance. Now, as you see in the later years, when a family is closer to retirement, their financial situation has changed dramatically. With their children now grown and with lower debt, possibly have paying off their mortgage, combined with the family having the money they need for retirement, the need for insurance is gone. That is why we believe a family should protect their income in the early years with life insurance and invest for the later years. Would you agree? The second page is designed to identify how the potential client is protecting their family. Over the course of our company's history, we have seen a change on how families deal with their income protection needs. The coverage quadrant shows where most families are today when it comes to how they protect their family. It is not meant to be a negative. Instead, it is designed to identify where the client is, because once the client has identified which quadrant they are in, there is a corresponding page to help you discuss the need for having the right protection. You only need to use the page that specifically relates to that client's situation. Here is how you present this page. Mr. and Mrs. Client, as we discussed with the theory of decreasing responsibility, the need to protect your family is very important. Now, there are really only 4 ways to do that. In the top left quadrant, you can see no coverage, which means a family is at risk. You have probably seen families like this. When a tragic loss happens, they are left to rely on their family, friends, and perhaps their church to take care of things like final expenses. This can be devastating for a family. Would you agree? The second quadrant in the lower left is limited coverage. Most people understand this to mean the coverage they get at their job, known as group insurance. It typically is based on 1 to 1.5 times their salary, or perhaps they purchased additional insurance when they got their credit card or mortgage, known as credit life insurance. Have you heard of these types of insurance? Now, the third quadrant is in the top right, and it is the cash value protection quadrant. Typically, someone who has this type of insurance policy may have been sold on the concept that policy builds savings, which you can borrow or that can be used for retirement or for college. Have you heard of this type of policy? Finally, the fourth quadrant is the term insurance quadrant. This type of coverage is protection only and is set for a certain amount and a certain time period. For example, 10 or 20 years. Does this make sense? Now, Mr. and Mrs. Client, I have a question for you. How do you protect your family? Once the client answers, you can go to the page that corresponds with their answer. We'll now look at those 4 pages, the 4 winning plays. If the client says they are in the first quadrant and currently have no life insurance, this page is specifically designed to have a conversation about their situation. There are over 35 million households that fall into this category. Let's dive in. Mr. and Mrs. Client, we see more and more families every day who are in your same situation. Unfortunately, when a family is at risk with no life insurance, it leaves them with the feeling of uncertainty, fear, and worry, knowing that if anything happened to the breadwinner, the family would be left in a tough situation. Would you agree? Now, in this illustration, we show that for less than $2 a day, your family could be protected. It shows John at age 30 being covered for $200,000 and his wife Mary being covered for $100,000. We cover the children for $10,000 each, all for $55.21 a month. That means for less than a cup of coffee a day, you could protect your family. Would you agree that it makes sense to protect your family? This page was designed to overcome the typical objections a client may give when they have some type of limited coverage. Now we are going to talk about group insurance at an employer. Remember, there are just as many downfalls when it comes to credit and mortgage insurance. Talk to your RVP on some quick tips on how to overcome those types of policies. Here's how to present this page. Mr. and Mrs. Client, as you can imagine, there are a number of people who benefit from an employer-sponsored life insurance. However, there are a couple of things you need to understand before you put all of your trust in limited coverage as a way to protect your family. The first downfall is that you are not in control. If I were to ask you to go and get the policy, you couldn't because you are not the owner of the policy. Your company is. That also means that if the company decided to cancel the policy, you do not have control over a decision that could leave your family uncovered. The second downfall is the limited amount of coverage. Typically, they only offer 1 to 1.5 times salary for the coverage of the employee, and they offer no coverage on the spouse. Now, consumerists recommend that you have around 10 times coverage, so that leaves you grossly underinsured. Finally, there are portability issues. For you to enjoy the benefits of the policy as they are today, you have to continue to be in the group. And to be in the group, you need to be working with the company. Now, let me ask you a question. Do you plan to work to the day you die? Probably not. That means when you leave that company, you have to convert that policy to a different type at a different, typically higher cost. In this example, showing an individual policy with Primerica, where you are the owner, which means you are in control. The policy covers all family members and has coverage up to age 95. It shows John being covered for $250,000 in coverage, his spouse Mary covered for $150,000, and $10,000 on the children, all for $69.13 a month. Would you agree that it makes sense to be the one in control of protecting your family and not leaving that to your boss? Now, if you notice the asterisk next to each of the coverage amounts, it's referencing one of our policy features called the Increasing Benefit Rider. If approved, this rider doubles the coverage for both the primary and spouse over the next 11 years, with incremental premium increases without any further underwriting. This was created because some families either cannot afford all the coverage they need today, or their needs grow over time, and we believe that a policy should grow with the family. Now, let's cover the Canadian version of this page. It's designed to cover mortgage insurance, and here's how to use it. Mr. and Mrs. Client, when you enter into a mortgage contract with a lender, it's not uncommon for the lender to encourage you to obtain insurance that will pay off the mortgage in the event that one of you were to die. That in itself makes perfect sense. However, obtaining mortgage insurance from the lender has some pitfalls. First, mortgage insurance has a decreasing benefit, which means that if there is a claim, all that will be paid out from the policy is the outstanding balance of the mortgage, which decreases every year as the mortgage is being paid down. Yet, the premiums you have to pay don't decrease along with your mortgage balance. Second, a mortgage insurance policy pays a benefit on only one life, even if two people are covered under the policy. As soon as one of you dies, the outstanding balance of the mortgage is paid off and the policy is terminated with no insurance remaining on the surviving spouse. Additionally, mortgage insurance does not give you flexibility on how the insurance benefit will be used, since the lender is the beneficiary, not the surviving spouse. Immediately paying off the outstanding balance of the mortgage may not always be the best course of action. The surviving spouse may now have a paid-off house, but there may be other expenses to deal with and no money to pay for them. Remember, a paid-off house doesn't put food on the table. Now, with a Primerica policy, the benefit remains level. Second, there is coverage for the entire family. In this example, we show John with $300,000 of coverage and Mary with $150,000 of coverage and $10,000 of coverage on the children, all for $69.55 a month. And lastly, you name the beneficiary of your choice. Now, wouldn't you agree that it makes sense to have a policy that gives you more flexibility and more peace of mind? With 55 million cash value policies in force in America, there is still a huge need to know how to have a conversation about how cash value works. For many years, this was the most prominent insurance in the industry. Now, your RVP may have some other great ways to show how these policies work. Here's how to present this page. Mr. and Mrs. Client, I'm glad to hear that you thought enough of your family to make sure you have life insurance. However, I want to make sure you understand how this type of policy you own works. Now, in this example, we show both John and Mary with $150,000 of coverage at a monthly cost of $298 a month. Now, one of the features that was probably sold to you was the savings element. It is often explained that you can borrow the cash in the policy or to use it later in life. What typically is not explained is how these two features are tied together. If you use the insurance, you don't receive the savings. And if you use the savings, it impacts the amount of life insurance benefits which are available. Now, at Primerica, we believe in buy term and invest the difference. That means for the same $298 a month, this family could have double the coverage at $300,000 for $123 a month. They could then take the difference of $175 a month and invest it at 9% to have $518,000 at the age of 70. Would you agree that it makes sense to have twice the amount of coverage and the savings outside of your life insurance? Now, let's cover the New York approved page for cash value. Mr. and Mrs. Client, I'm glad to hear that you thought enough of your family to make sure you have life insurance. Now, in this example, we are showing a cash value policy with John and Mary being covered with $150,000 each in coverage. Now, with a Primerica policy, we can give $300,000 of coverage for both John and Mary with $25,000 of coverage on the children. So, Mr. and Mrs. Client, you can have more coverage with an inexpensive term policy. Doesn't it make sense to have more coverage for you and your family? With 95 million term policies in force in America, you are bound to come across people who already own some type of term insurance. Although term is better than having cash value policy, not all term policies are created equal. We have created a brochure called Options and Benefits that helps explain Primerica Life features and benefits that will help you answer any question a client might have. The In the Know series of videos is available in the POL Download Center. Here's how to present this page. Mr. and Mrs. Client, I am so glad to hear that you have term life insurance. However, I want to make sure you are getting the best value for what you are paying. You see, not all term insurance is created equal. At Primerica, we believe in having a product rich in features to make sure that a family has the best protection. Here's a list of options and benefits. I'm sure you would agree that you should make sure your family has the best value for what you are paying. Now you can see why helping your client make a winning insurance play is so important. And now you are in the know.